A wonderful good evening and hello and welcome to our Master the Markets webinar by Admiral Markets. What a great pleasure for me to say welcome here. I guess now you have audio and let's make a technic check for us. Can you hear me? Can you see me? Do you have a slide? Please type it in the chat box if you can hear me and see me. Okay, Phil. Great. Okay, guys. I hope you had a great week up to now and a great day. In Germany, we had a really sunny day. It's like summer a little bit. And it's a pleasure for me to have this webinar with you. And I say thank you to my colleague by Admiral Markets to open this webinar so we can have the possibility to master our markets. Okay, let's see. Let's start about the risk disclaimer. You know, trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a beginner, please start with a demo account, not with real money. And you know, learn trading in a demo account. And this presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors like me. So, okay, you know the risk disclaimer about since August 2018, we have the new regulation about the European Union, and this differs for retail clients and professional clients. In our presentation, we only use demo trading accounts, but you know I use real money as well. And yes, our clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional terms. So let's see, that's the difference between DAX 30 and Euro US dollar. You can see we have a maximum of leverage restrictions about 130 and 120. And I can say it's completely enough. You don't need a high leverage. It makes you crazy in your mind. 130, 120 is absolutely enough to make real money in trading. And this evening, I want to show you how we can make money in trading. So, and this is your options between retail clients and professional clients. You see it. Admiral Markets, one of the best trader around the world with the best index offerings and DAX 30 and Euro US dollar. You see no minimum stop distances or requotes. Great stuff. More information at admiralmarkets.com. And Admiral Markets global offers, one world. You can see a lot of branches around the world. So guys, the chat is open. If you have any questions, please, in God's sake, type it in your chat box, whatever is in your mind. This is your webinar. I am not important. I only want to show you the way how you can make money. And the real success in trading is a human thing. This is a trading approach, what you can see here, because success, guys, is not a fantasy, and that's just your formula. And with this trading approach, you can see we make trades out coming off the correction zone. It has a probability between 65 and 72% of trading. And if you work with real and targets like Fibonacci, you have a probability of almost 80%. But attention, 80% is not 100%. And that's the problem for all traders around the world. A lot of traders cannot handle losses. And that's is a human thing, because we cannot expect 100% in trading approaches. If we have anywhere a 100% approach, we don't have any trading possibilities, because there doesn't exist stocks. There doesn't exist any market, because someone around the world, any really smart guy, wouldn't found this approach. But it wasn't, and it doesn't right now. So we have to handle around 70 to 80% of probabilities, but it means no 100%. That's the real truth in trading. And that's the point we have to deal with. Okay, you see, this is the picture. Please brain it in your mind. Brain it in your mind. Burn it in your brain. Sorry, burn it in your brain, in your mind. This is the picture. It's like a template you have to put on the charts and to make sure is it fitted or not. Is it a match that you can make a trade? It doesn't match, no trade. That's one of the possibilities you can survive in trading. So that's our rules. Rule number 5, 6, and 7 is working with where are you in the market outside of a fair price. You know, the behavior of prices always go back to the point of control, the fair price. So Fibonacci market profile shows us the target, and big picture, you know, daily chart must support us. And in this webinar on Wednesday evening, Master the Markets, you want to close the gap between education and practice. So we start with a view at the market and some trading ideas, and to train our eyes or view to the chart. And today I have a special point for you, how you can count on your pips. What does it mean when I say count in pips and hunt for the pips, not in money, not in percent, and only in pips. And that's the point, how you can count on it, how you can measure how many pips you need, and so on. It's a part of the business plan, and I want to show you how you can handle it, how you can deal with that, and at the end, how you can make money with that. That's the point for this evening. Rule number 7, 3 time frames, 3 templates, not time frames, 3 templates. One of the templates, look at this one. If you want to make trades in hourly chart, the daily chart is your big picture. And there you have 3 templates. You have to make sure that it fits to the market, to the chart you're watching for or you're looking for. First of all, the first template, do you have a trend there? And can you make sure that the trend comes out of the correction in direction or in a trend? It's possible to make a trend continuation to the upper side or in the short to lower side, of course. So this is one of the templates you can use to make sure trade in the hourly chart. Same direction, hourly chart and daily chart. Next template, you have a divergence on the upper or the lower side. Divergences are one of the strongest, most powerful signals, technical signals you can have in markets, because it shows you we have a special weakness in the market, and the market will have a reaction on it and will make a correction. And this point we can use in hourly chart to make a corrective trade to the upper side. Great trend. Second template. Third template is just only the support or resist at that point, the current point where you are right now, and this rebounds on the resist or the support you can use to make trades in the hourly chart, of course. It's the same, guys. It's the same. You want to make trades in 5-minute charts. Then the hourly chart is your big picture. The templates is always the same. The rules are always the same. Even you want to make trades in minute chart, then the 15-minute chart is your big picture. The templates are the same and the rules are the same. And that, guys, believe me, I'm at this job since 20 years right now. And it's a great honor for me and such a great pleasure to teach currently 110 clients in my DAO family, and it's always the same. I see it. I can see it on the results. It's the only chance to survive in trading if you stick to the rules. Every time, in every trade, you have to stop with examples. Accidents are not repeatable in trading. If you want to make money in trading, you need rules. You need a trading approach which is proven statistically proven that is positive. But let me say before we start, I know a lot of guys in the market around the world makes you a lot of guys make you a lot of offers. I had a great trading approach. It's proven. I made a real great back test. It's okay. You have a great positive result. But let me tell you something. For real trading and for successful trading, it's not necessary that you be too smart. People, they are too smart, and all are more smart than me, I know that. They want to explain everything in trading. Why does the market make this? Why does it this now? Why? Let me tell you something. It's not possible to explain everything in market, because the market is based only on probabilities, no more, no less. You cannot explain everything in trading. It's enough if you are clever, and a clever person always stick to the rules. A clever person has understand that's the only way to survive in trading or to become a successful trader is a proven statistically positive system, and the rest of the way is based on human behavior. Change your mind. If you may be a fan of Excel files, if you an analyst or something else, if you studied and if you're educated in mathematics or something else, great, wonderful, amazing. But it's absolutely not helpful or useful in trading. Of course not. It's completely enough if you are clever and if you are strong and disciplined to stick to your rules. And all this kind of back tests, listen to me, think it through. If you have a great offer in the market, we have so many offers around the world. Buy this system, buy this expert advisor, take this one. Yes, of course, there exists a lot of profitable, successful systems. But these back tests were made by a computer, by a system. And the computer never failed. So if you have a trading approach, you want to make a back test, you say to your computer, okay, make this back test the last 3 years, because you only can make back tests in the past, not in the future. That doesn't work. So the computer has no emotions. The computer has no fails. The computer doesn't think about, oh, should I make this trade? Should I don't make this? Oh, I'm feeling not so good now. I'm hungry right now. I cannot make this. No, a computer, always makes every fucking trade during the whole day, during the whole night, and then you have a result. Maybe you can follow my thoughts now, and you are at the point you think in the future. Now you have a positive result, and you see, oh, the profit factor is 1 point whatever, or 2 point or whatever. And you can see, okay, that's great. But now comes the real but. Can you make sure? Please listen to me very carefully. Can you make sure that you are able to make the same Can you make sure that you are able to make every trade which will occur in the future, in that time frame, at that point? Can you make that sure? Can you make it sure that you are able to never intervene in a trade? The computer doesn't think about that. Entry, exit, entry, exit, entry, exit, end. Can you make sure the same? And if you are not able to make that in the same way, you cannot expect that you have the same result. Write it down and think about that really, really important point. If you cannot make sure that you have the same behavior, the same reactions like the PC or like the computer which made this back test, and you cannot expect the same result, because you are, as a human people, as a wonderful woman, as an amazing guy, you have emotions. You have stuff around the day. You have to buy something. What do you do if you are in a store and exactly that moment the signal comes? You want to trade. You have to leave it. You will miss that trade in your statistic. And the next trade, but maybe this trade, this one trade, will occur while you are in the store for buying your food stuff or something else. That's life, guys. Maybe this trade is the great winner at that day and you missed it. The computer doesn't. So maybe you can make an expert advisor. But can you make sure that you never intervene? Even this expert advisor will have a drawdown phase. Can you make sure that you never intervene in that? So many questions, so many questions. Ladies and gentlemen, we have statistically data and numbers. 98% failed in trading. The reason? It's only a human reason. If you want to become a successful trader, you have to work on that human things. Of course, you need the basic about statistics of a proven system like this Dao Hao. Dao Hao is not a Chinese food. Dao Hao means the right know-how about the Dao theory. And Dao theory is really easy. It's not complicated. It's not a rocket science. It's really easy. You have a trend, you have the correction, you come out of the accumulation phase, and the market will decide how much money you will get. And think about it. Are you saying we should trade without emotions like a computer? Yes, I would say that. But you are not able to do that, because unless you are an alien. But Phil, I guess you are not an alien. I don't know. I guess not. So, and I guess you are not a computer. So that would be the best thing, that we can trade with like a computer without any emotions. Thanks God, you are not an alien. Thanks God. But it would be the best thing, but we are not. We have our emotions. So you see, we have to work on ways how we control that emotions, how we can control that emotions. And there are ways to control it. But for that, you need a coach, you need a person, a contact person you can talk about with. If you fail, if you want to cry, I miss something, and so on. You need a contact person you can, or a coach or community to handle this alone in front of your PC. It's really hard. It's really, really hard. And almost not possible, because you will waste a lot of time. I can say about the experience of my guys, 98% of my clients were successful during 1 year. 1 year. Guys, let's go on. Let's go on. Let's see. We have 2 working trades right now. You know, see, we have here Aussie New Zealand dollar. This is a working trade here. You see, we have our trend, a really big trend. You can see I've forgotten to make part sold here and to sell half of my position. I've forgotten, so whatever, it doesn't matter. And now we had a great correction, and now we are on track again. You see the point of control. The point of control is placed here at around about 1.04910, and now we had a great correction, and now we are on track again. You can see it's doesn't matter, don't care for it, because we are in the green zone, in an unfair valued zone, and you see the price wants to go back to the point of control. It's really easy. So, but to get inside of the trade, yes, you can, maybe with a stop buy here below, above this last point too. It's a trading chance again. So the other one, and you see it's always based on rules. Let me show you. I never, now in my past, I very often broke my rules, almost daily. Oh my God. If I think about that, it's so awful. Very terrible. But it's a kind of processing. Yes, it's a really hard process. And yeah, so you can see we had, let me draw it for you. Here we have this movement, correction. Yes, movement. Oh, here, movement. Then the correction. There was balance candles. Then we got inside of the market here, and then the next movement back to the point of control. It's easy, you see, always the same. Price wants to go back to the point of control, to the fairest price. And then we have, cause my stop were a little bit deeper here. We had a great correction now, but we are still on track again here to the point of control. So in my own past, believe me, that trade wouldn't work, wouldn't still work. Why? It was not possible for me to help these emotions, to keep on this emotions. Look at this one. I were inside of the trade since 19th of February. Now we have almost March. I were not able to hold on that emotions. Oh my God, up and down, up and down, up and down. I swear to God, I will cancel this trade a lot of times. But now, I don't care. Doesn't matter for me. I have my stop, I have my target, and the market will decide how much money I will get. The market have to decide. It's not my responsibility. I only have one task, stick to my rules. All the other decisions the market will make for me. Okay, next one, Aussie Swiss franc. You see it here, Aussie Swiss franc. The same rules. Can you see it? Movement, correction, movement, correction, and you know, at least 38% of the last movement, correction. We had this low at the 86% of Fibonacci. So my first target lies at 80% of Fibonacci extended version, and then I will get out the half of the position, and the rest the market will decide. But you can see movement, correction, accumulation phase, and now we are on track for the next trend continuation. But you can see the market makes this correction little a little larger and yes, more wider. Yes, more wider. So it's not my decision, but my stop is there. So what should happen in the worst case? What can happen in the worst case? Of course, the price or the trade will stop me out here. But I made my money management and my plan before I started the trade. Before, you know what I mean? Before. It makes no sense to make a plan when I'm in the trade. That's stupid. Too emotionally. You only can deal with such trades in that long way if you have your plan before you have or before you open that trade. It's really, it's one of ways how you can handle your emotions. And this is another topic we need to talk about that. You only can deal with successful trading, guys. You only can deal with that if you know your real why. So money cannot be the real why. Because would be money the real why, everyone would be successful in trading. But we have a loss and we have failed data and numbers of 98% of traders. They failed during 1 year. So money cannot be the real why. Let me ask, what is your real why? I got so many business plans from my clients, but very seldom, very seldom, I found a real why. What's your why? Because only if you have a strong why, you have enough motivation to stick to your rules and to keep on holding such trades and accept the result of the market. That's why the topic on my homepage, if you visit my homepage, dowhow-trading.com, accept the inevitable things. And in trading, we only can work with probabilities, no more, no less. So let's use the last 15 minutes to create, to talk about really interesting topic. First of all, maybe you think about last week we prepared this Euro British pound, and we said if we have a stabilization at the point of low, then we can think about the trading knowledge. Or do you see what happened? Nothing. We have a really weak euro and an amazing strong British pound sterling. So no trading chance, whatever. We have nothing to do at the moment. Okay, no trading chances at all. So let's see. I want to talk about that point. So let's see. Oh, here we are. Here we are. How we can make money in Forex market. Let's see. Where is my slide? There. Here we are. Here we go. Come on. Just here right now. Okay. I want to talk with you about where is my goal? What's your financial goals in trading? What's your private goals? What's your real why? So, and now we have to think about financial goals and risk. Let's see. Forex market is really easy. So please write it down, because this is the basic for everything we want to talk about now. In trading or in Forex market, we are working with lots. You have a standard lot, a mini lot, and a micro lot. This is really important. So, and in trading, it's the same, or in euro or in US dollar, you have to exchange it in your own currency. 1 pip, if you have a standard lots, it means one standard lot means 100,000 units. One standard lot means 100,000 units. If you have a change of 1 pip You win or you lose 10 euros, 10 with one standard lot. If you have a position with one standard lot, 1 pip means 10 euro or dollar, whatever you use, or Swiss franc, whatever. 10 euros, we used euro in that case. 10 euros, win or lose. If you use mini lot, the next size means 1 pip, 1 euro. So if you have a winner 1 pip, you won 1 euro, or you lost 1 euro. And don't forget, it doesn't exist a 100% approach in trading. There's almost a risk in trading, almost, and we have to handle and we have to deal with that risk. And the smallest size is a micro lot. A micro lot means a change of 1 pip means 10 cents of changing by 1 micro lot. So I always get the question, how much money or how much risk should I use in trading? Count in pips, not in risk. Count in pips, not in risk. So let's see. Look at this one, trading for pips. For example, you make a sell or you make a short trade. It means maybe you have an euro US dollar price of 1.0695, for example, and you will make a short trade. So you expect or you bet for a short that the euro will fall down, and you get the price back, or you buy the position back, you close the position, and the price is going back or is going down, and it's the right direction you want to trade. You have a short position, and you will close this short position at 1.0625. You made 70 pips, because the fourth number after the point is 1 pip, and in Japanese yen is it the second number after the point or the comma, whatever you use. You made 70 pips. And if you had a short position, you had a winner of 70 pips. If you had 1 standard lot at this position, you won $700 or euros with 1 position and only 70 pips. Okay. If you use, of course you can count it now, if you use 1 mini lot, you made how much? 70. And if you use 1 micro lot, you won 7. What does it mean? Look at this one. You don't need a high leverage. For what? It's only too emotionally. Too emotionally. If you have a 100 account and you made $7 or 7 euros with 1 trade, it's enough. Because you can repeatable. You have trades, you have rules. You have a probability of 80% of probabilities in a small account, or you have a $1,000 account, 70 pips, it's okay. Let's see. If you make sure that you have rules and you can make 400 pips, it means maybe, listen, 70 pips with 1 trade. You have maybe 5 trades in a month. You have almost 350 pips. Some losses, but at the end you have more winners, because if you stick to the rules, that's the point. Discipline, stick to the rules. Then you can make maybe 400 pips a month. And with the micro lots, you make $40. Okay, you can say, oh, $40 is not so much. But if you have, listen to me, if you have $1,000 account and you are able to make $40 a month in a year, I guess you have enough money, almost double your account, but on a stable basement, on a stable foundation. Maybe if you have $1,000 or $2,000, $3,000 account and you can use a mini lot, you have every month $400 or euros. Is that a life changer for you? Yes, of course. It's a life changer for most of the people. $400 is so much money. And if you have maybe 3,000 or 5,000 on your account, and you are able to make 400 pips a month, and you can use 2 mini lots, you are able to make $800 a month without a high leverage. It's enough for 1 to 30 or 1 to 20. It's completely enough. What do you want with more money? It's not possible to make that on a stable foundation. You must be realistic in your expectation about your profit or money goals. So for DAX, 1 pip is €1. No, not at all, Christine. In DAX, but it's almost the same. It's almost the same. It's depending of your broker, of course. But I guess I have to look for, but I don't know exactly. But I guess in DAX we doesn't count in DAX with pip. In DAX you have 1 point. And I guess, but it's the same. You have different sizes, 1 point and 10 cent, I guess. I don't know exactly right now. That's the reason I hate DAX. I'm only want to trade in Forex. It's easier to make trades there. But in DAX, it's almost the same. Let's talk about that later. I have to make sure. I have to look what is in DAX. Okay, so let's see. Let me draw for you the following things. For example, you have an account. I make an example that you can follow my thoughts. If you have an account with 1,000 euros and you want to risk 1%, that means for you, you can risk how much money? How much money is 1% about $1,000 or euros? You can risk 100, right? 100 euros. You can risk 100 euros. That's easy. So, now, think about with a standard lot, with 1 standard lot, you can risk how many pips? How many pips? Oh, 10 euros. Sorry, 10 euros. Sorry, my fault. 10 euros. 1% oder 1% von 1000 sind 10, ne? Yes. I'm not the mathematic guy here. Thanks, Kirill. Thanks, Kirill. So, 10 euros. 1% of $1,000, you can risk 10 euros. If you use a standard lot, how many pips you can risk? Now, it's easy. We said 1 pip in the standard lot is 10 euros. So you can risk 1 pip. What should I do with 1 pip of stop? So it's not possible. So you can use 1 pip in futures market, but we are here in Forex market. It's almost not possible. So in that case, with an account of $1,000, and you want to have a risk of 1%, and that is almost enough. 1 is a number almost everybody handles it with 1 risk, with 1% risk. So, but it's not possible. Because if you look at this one, let's go back to that trade, for example. Listen, look at this one. I had I got inside of that market here at around here we are. Price 1.0428. And my stop loss is here at the last 0.3, because you have to stick to your rules. And the stop must be placed, if you make trend trading on that based on our approach, the stop is placed below, or in a short trade above, the last 0.3, the last correction point. So that means I got inside at 0.428 and I had a stop at 1.0378. That means 28 and 22, 48, 50 points. Almost 50 pips. 50 pips. So that means I have a stop of 50 pips at that trade. For example, stop of 50 pips. So, what do you think? Can you use one standard lot in an amount of $1,000? If one pip means $10 or euros, that doesn't work. That doesn't work. You cannot use a standard lot if you have a small account. So, what do you have? What do you have to use? You need a stop of 50 pips. Okay, let's see next one. You know, one mini lot means €1. So now you know $1,000 account, risk 1%, you can risk €10. So you need a stop, for example, 50 pips, and that's average in hourly chart, of course. So that means one lot means €50. So you see, you cannot use a mini lot. If you have your rules and if you have a small account of $1,000. Okay, last thing. Now we have one micro lot. That means 10 cent. 10 cent by one lot, micro lot. Okay, that means at the end you have a risk of €5. That's the answer. You can use one micro lot, or in that case, because you can risk €10, that means you can use 2 micro lots. Micro lots for that trade if you have stop of 50 pips. One of the reasons, guys, why so many people failed in trading, they make a mistake at that point. Because now they realize, oh my God, what means €10? I cannot get rich with €10. Then they rise up with the percent. And then they said, oh, I can risk 2% or 3% or 4% of risk. Okay, then you can have a risk of 50. But you make one mistake, guys. You expect always a winner. What do you do if you start with trading and your first trade means minus €50 because you take 5%, because you said, oh, I have a great approach, I can take 5%. What do you mean? What do you do if your first trade is a loser and you lost €50? What do you do then? That means you need next time €50 at least and more. So that means you have to risk more and more and more and more. That's one of the reasons why so many people crash their accounts. That's the wrong way. And that is one of the things I always say, you have to accept the inevitable thing. You cannot getting rich with a small account. You can learn trading. You can make money, of course, during a year or 2 years or 3 years, but never failed in risk. Almost 1% is enough. Accept it. And that is the point why I always said, you have to change your mind. You have to change your mind. Because it's possible. It's absolutely possible to make 400 pips. It's possible. For example, look at this trade. For example, I have another trade on another station, and there I'm in the plus with more than 300 pips. That means I'm in the plus with more than 300 euros right now with one trade. One. So look at this one. Aussie New Zealand, for example. We have an entry at 10.28. If we will reach the point of control at 1.0491, we make almost 60 pips. Guys, 60 pips with a micro lot means 6 euros. So 60 pips is possible. And such trades 4, 5, 6, 7 times a month means you can make 300 or 400 pips a month. It's possible. Count in pips, not in money, not in percent. You have to count and you have to catch and you have to collect pips or points if you make trades in DAX or whatever. Collect pips and points. Focus on that point, not on money, not on percent. Stick to your rules. That's the first point. And then change your mind. That's the first point. That's the most important thing in trading. There is no other way to become a successful trader without sticking to rules. As long as you focus on money and getting rich, you will never getting rich. You will never become a successful trader. I made this shit stuff since 20 years right now. I failed so often in my life. I lost everything in my life. Everything. Really fucking everything. It's not worth to waste your time with trading. So focus on the right things, guys. And the real question you have to answer is, what's your real why? Found your real why, and I promise you, and I grant it to you, I give you a guarantee, I give you a guarantee. If you found your real why, and you have a human coach and a human community around you, I can give you the guarantee you become a successful trader. As long as you focus on the wrong things, and as long as you don't find your real why, you cannot be successful in trading. Maybe in a short term, that's okay. That's possible, but it's an accident. Absolutely accident. You know the numbers of failed traders about asthma and the internal statistics. Don't forget that there must be a reason. And the reason, guys, is not the rules. The reason is not based on markets. It's always based on your behavior. I promise you, I really promise you, if you find your real why, then you have a possibility to become a successful trader. I hope you understand a little bit. I hope maybe you have some things to think about that. It was a great pleasure for me this evening to talk to you. Thanks for your lifetime. I appreciate that really much. And I wish you a wonderful evening. Have a great day. And be careful about your thoughts, because they are the beginning of your actions. Bye bye, take care, and enjoy the rest of your day.